Talking it again. Test 1 2 1 2. Is on mute? Muted me? Well, at least for that, I haven't even said anything yet. I've got the whole world in my hand.
Hello, hello. This is Pete Anderson with Engel and Völkers, and this is your latest and greatest Asheville market update. I'm here with my good friend Pat Hunt today. He's a local lender, one of our faves, and he's at United Federal Credit Union. Pat, welcome.
Thank you. Thank you. Glad to be here. Thanks for having me.
Pat, we need some information.
Pete.
What's your take on the market right now?
Well, everything I've heard from you guys and other real estate professionals, certainly seeing a lot more inventory come about. So that's comforting and promising to people that have been waiting for a long time and trying to find the right home. So I believe we're starting to see that shift of more houses becoming available. As far as the market and interest rates are concerned, we're starting to see a shift there too, which is great. We have, the Feds have announced that they intend to lower the Fed rate later this month. And the news alone of that has lowered the mortgage rates. That in combination with, the market reports that go into, the making of those decisions that we get every month as far as the jobs report and inflation, and those metrics have all been favorable for them to do that.
So some of the rate drop has already been built in, correct?
The effect it's had on mortgage rates has been felt. When they announce that they're going to do those things, typically you'll see the mortgage rates affected a lot by news, because what happens with mortgage rates, and they're largely impacted by the bond market and the 10-year Treasury bill. So when you see those, the T-bill drop in rate, typically you're going to see the mortgages drop in rate. And that happened when they came out and said, just by saying, hey, we plan to drop this rate later in the month.
So Pat, I know one thing a lot of the public is hung up on are those super low rates we had during the pandemic, right?
Sure.
We all saw
just prior to,
Yeah. A lot of people refinanced at 3-ish%, and it's hard to get over, for some people, where rates are now, even though they've come down a little bit from where they were. But can you give us some perspective on average historical rates and how we should try to view things as they are now?
Yeah, absolutely. Historically, according to Freddie Mac, I believe it was the last 50 years or so, the average rate of mortgage was just under 8%. So,
wow, yep.
Where we are now with being in the low sixes, I mean, that's still a healthy place to be.
For sure.
It doesn't feel that way when the cost of things at, the grocery store and other impacts that are, different now from, historic. It doesn't necessarily feel like that's the best place, but low sixes historically is a really strong mortgage rate. Strong in a good way, favorable. So
that's good to hear. A little perspective should help, right?
The last 3 to 5 years ago, when they were at that all-time low, I mean, that was not the norm. There are still ways to even get rates lower than that. It's still, people can still buy points to get their rate down, and that's we could have a whole one-on-one about that at some point down the road. But we can seller concessions can be used to buy points down, seller credits, to get that rate down. But honestly, sometimes when we're in a declining rate environment like we are in, and hope to continue to be in, it doesn't always make the most sense to buy points down right now, because they may be able to get that rate they were going to buy down, in 6 months to a year without having to pay for it, and they do a refi at that time.
Sure.
Honestly, it's everybody's scenario is different, and it really takes somebody who's well versed in finding the best scenario for each individual borrower or buyer, to go over all the different. There's so many programs out there. There's government loans, there's conventional, there's portfolio. FHA, USDA. There's just so many different options for people. They really need to know.
Well, that's where you come in. You can guide them to the right product.
That's the idea. Step one is just really having a conversation, whether it's with me or somebody, that make sure you're comfortable with whoever, whichever buyer, you're talking to. Make sure they're comfortable with who they're working with.
Yeah.
Because it's huge. It's a relationship. You're spilling out a lot of personal information, income, credit, all that, and you want to make sure you're talking to the right person about that.
Pat, thank you for the info so far. You are a deep well of knowledge. One more question for you. For those looking to buy now, what can they do to prepare for success and actually figure out how to get themselves the best rate?
Sure. Good question. So there's a lot of factors that go into the pricing of a loan. What I mean by the pricing is the variables that go into how somebody gets the rate they get. Credit is a big factor,
Sure.
And then the loan to value, which is going to be determined by the property's appraisal and their down payment. So, step one is have a conversation and start an application with a lender. Make sure you're using up-to-date information and not hypotheticals. If you really want to know the snapshot of your scenario, pull credit. And we can do that in a way where we have the ability to do a soft pull. It does not affect your credit score.
Great.
So we can see, what those scores are. And then we can coach and guide, because there's a lot that goes into, why your scores are what they are.
Mm-hmm.
But then a big factor in the credit score side of things too is any revolving debt you have attached to that is a utilization percentage, which is what they are currently using of that line of credit versus what their limit is.
Right.
So a lot of people, even if they pay their balances in full every single month, there's a balance that's reported to the bureau, and they use that balance and then the limit to come up with the utilization percentage. So knowing when your statement cycle ends, paying that for somebody who can put a big chunk towards that number right before the statement cycle ends, so that balance is lower that's reported to the bureau, the utilization percentage is going to be lower. You're going to see your scores jump. The bottom line is get with somebody who knows what they're doing. Find a lender who's well versed and can guide you in your scenario, you and your household, on which way you should go for your scenario, and then be able to coach accordingly to it.
I think that's fantastic, and I agree. And you want someone like Pat Hunt who can dork out on the rates and everything else, and get you over the finish line.
A number of years, but I found it. I absolutely love it.
No, you're very good at what you do. So
thank you.
Thanks for watching, everybody. Come see Pat Hunt. Give him a call, and we'll see you next time.
This is over.
Is that okay?
Call me.
Yeah. Perfect. I'm here with my best friend, Pat.
Good to see you again, Pete.
We met in the Navy. Back in
the Navy.
Back in NAM.